Dangote plans to list his $20 billion refinery and pay dividends in dollars. Investors will love it, but does this set a new standard for attracting capital into the Nigerian market? Good morning and welcome to another power-packed edition of Business Week. Emerging market private credit just hit a record $18 billion as investors hunt for yield in expected places, while South Africa raised almost $700 million through its first ever infrastructure bond, and Angola's wealth fund is teaming up with GEMCorp to launch an Africa infrastructure fund. Meanwhile, Trump is throwing $12 billion at American farmers caught in his trade war, and Walt Disney just agreed to invest $1 billion in OpenAI because apparently Mickey Mouse needs AI too, while the Federal Reserve delivered its third rate cut of the year amid internal dissent. Closer to home, Dangote plans to list 10% of his $20 billion refinery on the Nigeria exchange in 2026 with dividends potentially paid in dollars. But the real story today is about power. Nigeria's $4 trillion naira, power sector rescue plan is underway with bonds issued, gas debts cleared, and grid collapses down from over a dozen to just one this year so far. Can we finally turn the lights on for good? I'll be speaking to the Chief Technical Advisor to the Honourable Minister of Power on this and much more. As always, if you missed the big business stories of the week, don't worry, I've got you covered. I'm Rolake Akinkunmi-Filani. Stay tuned. Let's start with global markets. It was a sharply negative week across the energy commodity spectrum, natural gas taking the biggest hit. Let's look at what happened. Demand concerns resurface, inventories also came in higher. We see Brent, WTI, natural gas, RBOB gasoline falling. Brent fell 4.39%, WTI was down 4.7%, reversing the previous week's gains. Actually, the steepest decline came from natural gas, which plunged almost 25% as we're getting warmer than expected temperatures, which helped to soften heating demand. Gasoline also slipped over 5%. Weaker refining margins may be the cause there. The NGX is next. The NGX closed the week on a strong note with prices rising even as deal activity softened. As we can see there, the all-share index gained 1.63%, renewed interest in some of the bigger cap names, and I guess end of year portfolio rotations. Equity cap rose similarly, up 1.64%. Volume surged 58%, and value traded jumped an impressive 96%. Investors deployed bigger positions despite deals falling 3%. Fewer transactions on the market, but they were significantly higher in value. I guess institutional players still very much committed. Now, in Africa, we saw a mixed picture, but it was broadly a positive week with modest gains against most of the major indices, with the exception of Nairobi. Johannesburg was up by 0.73%, stronger mining sentiment. Ghana added 0.93%, continued banking sector resilience there. Morocco gained 0.53%, steady interest we're seeing in many financial stocks. But Kenya, Nairobi was the only laggard. It was down by 1.07%, a few foreign outflows there. But overall, the continent maintained a relatively cautious but upward tilt. Wall Street, mixed performance. Dow climbed, but the tech names, look at NASDAQ, the tech composite index there. The tech names pulled the other indices lower. The Dow rose 1.1% on strength in industrials, financials, but S&P 500 slipped. NASDAQ also fell, cooling momentum there, especially for the big mega cap names, and continued fears of an AI bubble. Let's come to my top picks from around the world for this week. Let's look at what the wall is saying. Well, the first story here really is the emerging market private credit space. And of course, private credit is really when companies are able to take loans from asset managers instead of traditional financial institutions like banks. And according to the Global Private Credit Market Survey, emerging market credit, that is countries in emerging markets borrowing from these asset managers and fund managers, the value of those transactions hit $18 billion by the third quarter of this year. And yeah, that's huge growth compared to the 16 billion we saw a year ago. And what this signals is really that this is a growing and interesting asset class. We're seeing more deals being done in private credit, and we're seeing many companies opting to blend private credit with traditional bank or commercial finance. Now, South Africa has raised its first infrastructure fund, and this is part of the Ramaphosa government's plan for the budget finance for infrastructure program, the BFI program in the country, raising about $695 million. The subscriptions were 2.2 times oversubscribed. So South Africa is sort of returning to the capital markets relatively strongly. We saw S&P there in November revising the country's credit ratings for the first time in years. They seem to have got the budget issue under control and now really focusing on infrastructure spending for real. There's a big hospital project in Cape Town that will also benefit from some of these funds. And interestingly, the Development Bank of South Africa will be managing these funds raised and deploying them into targeted rail, port and infrastructure projects across the South African economy. Still on infrastructure, the Angola Wealth Fund is partnering with Gencore, London-based asset manager to launch an infrastructure fund. That infrastructure fund will see about $500 million worth of assets under management to fund infrastructure, and it will be called the Pan-African Infrastructure Fund. It will be headquartered in Abu Dhabi. You ask me why Abu Dhabi, not Africa, but interestingly, the Gulf Cooperation countries have been some of the biggest sources of capital for African infrastructure in recent times. Abu Dhabi alone investing about $69 billion into the African continent in the past decade, just under a decade. So I think for Angola, the Fundo Soberano do Angola, which is the sovereign wealth fund that was set up under the former president Dos Santos, will be working alongside Gencore to really boost infrastructure spending. But let's look at what the figures say. So this fund is $500 million. Africa's annual infrastructure investment requirement is estimated to be about $100 billion. Still a drop in the ocean, but nonetheless a good move there for Angola's sovereign wealth, Pan-African ambitions, because the fund will have a Pan-African remit. Trump has announced a $12 billion aid package. Some might call it a rescue package for American farmers who are feeling now the weight around the tariff issue. And this really centers around some key agribusiness soft commodities, and specifically soybeans. Many soybeans farmers in the American market have suffered because at one point in the past year, China suddenly stopped buying soybeans from the US over tariff tensions. Now, of course, President Xi and Donald Trump did meet back in October to agree some sort of import structure, export trade structure around soybeans to help American farmers. And China has agreed to buy about 12.5 million tons of soybeans before the end of this year, and another 25 million tons over the next 3 years. But it hasn't completed the plan for this year. And if you speak to many of the farmers in interviews that we're seeing across many news sources, the feedback is that $12 billion is just not anywhere near enough. So this is a major challenge because the trade and tariff wars are having unintended consequences back home domestically in the American market. So $12 billion bailout package there approved by the American Congress. Now, finally, the Walt Disney Company is investing $1 billion in OpenAI. It's a bit of a trade-off here because what is happening, it's a sort of barter type of deal. Disney is licensing key comic characters such as Mickey Mouse and others to the OpenAI startup. And OpenAI is now going to use those Disney characters to create various tools for OpenAI software and apps across board. Now, as part of this deal, OpenAI will get investment from Disney, but it's also allowing Disney to do an additional $1 billion worth of investment by issuing warrants. Now, this is obviously going to change the landscape of how these companies partner, but we're seeing the entertainment, the film, the streaming world now really taking a closer interest in the artificial intelligence ecosystem. And speaking of streaming, of course, you saw the big news that unfolded during the week between Netflix, Warner Brothers, Paramount, the Trump administration and whatnot. This sector is really going to be at the forefront of the technology revolution being driven by the AI subsector. Well, that's it for my top picks from around the world for now. Let's now take you to our top stories from around the world. First, the Federal Reserve cut interest rates by 25 basis points on Wednesday, marking the central bank's third cut of the year. Fed officials were split on the decision to lower rates to 3.5 to 3.75%. Chicago Fed's Austan Goolsbee and Kansas City's Jeff Schmid favored holding steady, while Fed Governor Stephen Miron pushed for a 50 basis point cut. China's US-bound goods fell for an eighth straight month despite a recent trade deal, even as overall exports surpassed expectations in November. Outbound shipments surged 5.9% last month, topping economists' 3.8% forecast. But exports to the US plunged 28.6% in November, the eighth straight month of double-digit declines, despite the Xi-Trump trade deal reached in South Korea in late October. President Trump has introduced a new immigration program that offers wealthy foreigners a fast-track route to U.S. residency in exchange for a $1 million contribution, an unprecedented shift that blends the administration's restrictive immigration posture with a high-priced, pay-to-accelerate alternative for those who can afford it. The announcement came on Wednesday at a White House roundtable event where Trump formally unveiled the Trump Gold Card and launched its official website, trumpcard.gov. The online portal went live on Wednesday afternoon, marking the government's first public release of application details, timelines, and fee requirements. South Africa is committed to ensuring its inclusion in any extension of the African Growth and Opportunity Act, AGOA, a Trade Ministry spokesman said on Wednesday. We continue to lobby for an extension in its current form, said Camille Ali, spokesperson for Trade Minister Parks Tau. This follows comments by U.S. Trade Representative Jamieson Greer that the Trump administration could consider excluding South Africa if Congress pushes for that outcome. Ivory Coast President Alassane Ouattara has been sworn in for a fourth term following a landslide victory in October elections from which his main rivals were barred from running. Ouattara, 83, who first came to power in the West African nation in 2011, will lead the world's top cocoa producer until 2030 if he serves out the full term in office. Aliko Dangote has unveiled plans to list 10% of his $20 billion refinery on the Nigeria exchange in 2026. Dangote also announced discussions with market regulators to enable future dividend payouts in US dollars as a hedge against currency volatility. The Honorable Minister of Finance will approve this, he said. We'll be talking about that a bit later in the show. Meanwhile, Nigeria's external trade gained pace in the third quarter as rising imports met a rebound in exports, leaving the country with another positive trade balance despite a narrower surplus. Total merchandise trade climbed to 38.94 trillion naira, driven by stronger crude shipments and a jump in non-oil raw mineral exports. Exports accounted for nearly 3/5 of total trade at 22.81 trillion naira. The Central Bank of Nigeria has renewed its commitment to transforming agricultural financing and repositioning the sector as a cornerstone of Nigeria's economic revival. Cardoso said the persistently low level of credit flowing to the sector underscored the urgency of rebuilding Nigeria's agri-finance system and repositioning the ACGSF as a more dynamic instrument for channeling capital to farmers and agribusinesses. African Airlines are projected to maintain a net profit of $0.2 billion in 2026, even as passenger traffic is expected to grow by 6%, according to the latest financial outlook for the global airline industry released by the International Air Transport Association, ITA, on Tuesday. Despite this growth, carriers in the Africa region continue to face very thin profit margins, with a net margin of just -1% and revenue per passenger forecast at $1.30. ITA's report noted that African airlines face the highest unit costs globally, with an average cost per available ton kilometer of around 140 US cents, nearly double the industry average.